Welcome to the B.F. Anderson Technical Report for July the 15th. You know, every weekend I spend several hours attending webinars, and what I do is I take this information and try to compress it down to 8 to 10 minutes for the purpose of this report. This week was particularly interesting. One of the analysts that I listened to basically talked about the small cap dilemma. And the dilemma is that the indexes are the problem. It's not small caps. Small cap stocks can be quite rewarding. The point he made is that there's just so few good ones, and the indexes, like the Russell 2000, is trying to cover 2,000 of these stocks, and there just aren't 2,000 good ones. So that's one point that was made this weekend, and the other point that was made by Ryan Detrick, and I have here the graph, and basically his question is, how many times has the Federal Reserve reduced interest rates when the market was within 2% of a high? So he went back to 1980 and found out that there were 17 times that this occurred. It's interesting to note that, and I show a graph on this later in the video, but every year, a year later, the market was higher. So, there's no guarantee that this is going to repeat. But basically, this study says that every time the Fed has cut interest rates with the market within 2% of a high, 1 year later, the market was always higher, without exception. The average gain was 15%. So let's get into the graph. The first graph that we have here is the daily NASDAQ. You can see hitting an all-time new high. The moving averages are getting quite constructive here. We've got the 25-day crossing above the 50-day. So that's a golden cross. Looks very good, very powerful. Now on a weekly basis, last week volume was a little bit below average. However, we did rally to a new high. And the most important thing is that the 35-week moving average, which is similar to the 200-day, 35-week would be 175 days, and it is calculated weekly, so you get a little bit different picture, but the picture is clear. Uptrend, very strong. Advanced decline line, we're getting some advancers, not as many decliners. As a result, the advanced decline line is in an uptrend. The high-low index, again, we're seeing more new highs than new lows in an uptrend, looks very powerful. Then if we look at the number of new lows on the New York Stock Exchange going back over the last, say, month or two, you can see a little bit of a spike in May. However, we settled down June, and July has been quite quiet, looking constructive. Now, I think this is really an important graph. This is a long-term graph. This is where we look at the 10-month moving average compared to the 20-month moving average, and it's kind of a graph that I always keep an eye on. You can see that back in 15 and 16, we really had a pretty difficult go of it there, and that's what we hopefully are not going to see again for a while. Now remember, the moving averages are updated monthly, so we're not seeing a dramatic change yet in the moving averages, but the index is absolutely at a new high. Put-call ratio, where we're measuring fear and greed. We got into extreme fear, we've dropped down now, and now we are in greed. We're not in extreme greed, but we are in levels that could indicate that the market is due for some sort of correction or pullback. The S&P 500 index using the 200-week moving average. As we've noted in the past, we pull back, we rally to new highs, we pull back and we rally to new highs, and that's exactly what's happening here. The value line geometric, which really does paint a picture, and this could be also a way to look at small caps. This is a 1,700 stock index, so it's a big index. Again, the same problem. There aren't 1,700 good situations out there, and it's not market cap weighted. These indexes, the ones that are market cap weighted, can really be deceptive, and you need to be aware of that. So the value line has not broken out and making new highs like the rest of the indexes, but it is improving. The global Dow, just kind of keeping an eye on the global stocks, we can see kind of a similar problem as the small caps and the value line. We're not rallying to new highs, but we are improving. Now, I thought this was an interesting study that we looked at. And what's going on here is the Federal Reserve is it's worried about deflation. It's not worried about inflation. Inflation is just not a problem like it was back in the 70s. It could be globalization, it could be technology, and so forth. But labor rates are not going through the roof, causing hyperinflation. So the Fed is suggesting that they're going to cut interest rates in order to stimulate. Now, one other thing just to note here is that last year in 2018, we actually did go into what I would call a bear market. The market dropped 19.8% in this period here, which 20% is always said to be a bear market. But this came after a really nice uptrend that really got started around 2016. And we've been kind of stuck in a box ever since with a bear market in the middle of it, so it's kind of tested your patience. Again, the S&P has broken out of the box, making new highs because the Fed reversed course here and is now talking about cutting interest rates instead of raising interest rates. So earlier in the video, we talked about the study that went back to 1980, and the Fed has cut rates 17 times while the market is within a 2% of a new high. The average gain 1 year later was 15%. So I'm showing an example here of 1996 and 1997, where after the rate cut, the market climbed 21.4%. Now the average was 15, but this was an exceptionally good period. So you can see long period of consolidation, a rally, Fed cuts rates, market continues to rally, Fed cuts rates, market consolidates, however, continues to stay into an uptrend. So I think that study is very valuable and interesting. So here are the top five. Now we're going to continue to see in the top five. Now remember, the top five is not a buy list. This is nothing more than trying to see what are the strongest readings we're getting on which stocks. So again, if we see advanced micro devices, that tells me semiconductors and tells me technology continues to be strong. Here's Enphase Energy. Now this is solar power related. Now that would really shock a lot of people, but you got a major buy signal in this stock back here in May, and it has continued to be in a very powerful uptrend. This is Innovative Industrial Properties. This is somewhat of a marijuana play. Legalization of marijuana. However, on Friday, big drop on heavy volume, so I would kind of watch this one. I'm not so sure it's going to work. Roku, which is streaming video as people cut the cable, get away from cable, move towards streaming. Roku is a pure play in this area. Now, you know, their competition is people like Amazon, has a Fire, Amazon Fire. We also have competition from other places, but this company is a pure play in streaming video. Snap, interesting situation. This is a real young person type of service where they can get on their cell phone and take pictures of themselves and make funny faces and funny figures. But it is a chat. It is a social network. So all in all, we're seeing a very positive activity in the indexes, making new highs. If you have any questions, please give me a call.